It's time for the 3-for-1 stock split of Tesla, and investors are incredibly excited. Unlike its cars, shares are getting a price drop. For just $297, you can become a proud owner of Tesla stock, which had been $891 at the close of trading on August 24. Today's video reveals why Tesla's new stock split is exciting investors.
Our Phil LeBeau has details for us. Phil?
Hey, Scott, Tesla filing with the SEC that it plans to do a 3-for-1 stock split. Now, this is not a surprise. The company indicated earlier this year that there would be a stock split coming at some point this year, and most expected that we would probably see it relatively close to the summertime.
Why Tesla's stock split is exciting investors. Tesla stock, which has been trading between $600 and $1,000 for the past calendar year, will soon be more affordable for investors thanks to a 3-for-1 stock split announced by the company.
I think I'm going to propose too.
Let's make a toast.
Investors are super excited because one way that a stock's value might be boosted is through a stock split. Large companies like Tesla are increasingly employing stock splits because they are good for investors. Even though a stock split shouldn't alter the market value of the company as a whole, a lower share price may entice additional investors to purchase in, so enhancing the stock's market value. Tesla's shareholders voted in favor of the split during the company's annual shareholders meeting. The split means an investor who formerly owned 1 share of the company will now hold 3 shares, each of which will be worth 1/3 of its original value once the split is finalized on August 25. The stock price, which had been $891 at the close of trading on August 24, is around $297 after the split. After the market closed, Tesla shareholders receive a stock dividend equal to 2 new shares for every existing share. Because of the stock split, more ordinary people can afford to buy shares. Also, it lowers the cost of stock options trading. To increase the stock's liquidity and trading activity, it is usual practice for companies to split their shares. The move will virtually increase the number of Tesla shares accessible to investors. Still, it will have no impact on the market value of the firm or the value of any investor's investment. Moreover, stock splits can boost demand by making previously unaffordable stocks more accessible to regular investors. The value of your stock holdings will not change due to a stock split. Your shareholdings will grow, but that's the only difference. If you own a relatively small number of shares in a company, you should give similar thought to the issues involved. If there is a stock split of 2-for-1, an individual who had 1 share before would now own 2 shares. You would wholly own that share of stock. Stock splits are largely cosmetic, but technology companies with increasing stock values use them to make trading in their shares more accessible to individual investors. Discover in the coming seconds why Tesla wanted to split its stock. The stock market has recently shown signs of even more excitement, with numerous opportunities for quick financial gain. Subscribe to our channel and choose to receive alerts of new posts by tapping on the notifications button. That ensures you never miss out on any of the best financial advice or newest information in the finance world. Why Tesla wants to split its stocks? Tesla is contemplating a stock split because it would make the company's common stock more affordable for ordinary investors. According to the company's proxy statement, the principal motivation for trying to split its common shares is to attract and retain top talent. The firm takes pride in the fact that, unlike its manufacturing rivals, it provides its employees with shares. Between the last split in August 2020 and the release date of the proxy statement on June 6, 2022, the value of a share of Tesla stock rose by 43.5%. Since then, more progress has been made.
Without a doubt.
Tesla believes that a stock split will give its employees more flexibility in managing their ownership because of the reduced market price of the stock. The corporation believes that taking this route to increase morale will benefit shareholders in the long run. What should you be expecting from Tesla's stock split? There's more you haven't heard, so hang on. In a company statement earlier this year, Tesla explained its rationale for pursuing a stock split, writing, "The stock split would help reset the market price of our common stock so that our employees will have more flexibility in managing their equity, all of which, in our view, may help maximize stockholder value. What to expect from Tesla's stock split? One of the major market trends of the summer of 2022 that is just getting started is stock splits. Tesla's stock price has reached $1,000 a share, making it unaffordable for most average investors. The stock split of 3-for-1 is intended to reverse this trend and attract more small investors to the company. Until the stock split is finalized, it is impossible to predict what Tesla's new share price will be. A stock split may entice investors if the previously more expensive stock is now being offered at a much lower price. However, investors rarely benefit from a stock split. You should research, keep an eye on stock charts to identify when to buy, and zero in on companies with solid fundamentals and price performance within their industry group. A stock price prediction for Tesla is something you should not overlook. Watch our video on how much will Tesla stock be worth in 2025 and 2030. Top experts' prediction. I hope you got a kick out of watching today's video. Thanks for watching, and we'd be happy to see you in our next video.